welcome to Thinking Solo. This is the latest episode where we are going to be talking about volatility. I am your host and creator, Ryan Derousseau. I'm a fee-only advisor who works with the self-employed and their families, and you can find me at thinkingcapfinancial.com. Thank you for joining me. I'm so happy you're here. Read anything interesting in the news today? With everything that's going on and everything in the world that's kind of seems on fire, I thought it would be a good time to talk about volatility and the value of volatility. I'm a huge college basketball fan, so this is especially a very exciting time of year because with the college basketball tournament and whatnot, there's upsets, there's last-second shots. My team, the Jayhawks, just lost on a last-second shot. And so it could be really exciting when that's happening on the basketball court, but really terrifying when it's happening to our net worth, which is what's happening on a greater scale right now with the war in Iran and the conflict in Iran, however you want to label that. It's resulting in increased oil market, oil prices, increased volatility. Your personal wealth may be going up and down depending on how much you have access to the market. And so it's a really good time, I think, to just kind of check in and see, sort of your thesis on investing. And I'm going to talk a little bit about my thesis on investing because really, this is the time to buy. This isn't the time to be scared. This is the time to increase your holdings. And I'm going to talk about that in a minute. And then also at the end, a little bit of movie talk as well. There is value when the market sees red because what happens is you're seeing all these up and downs, and if you buy certain funds on a regular basis, let's say the first of the month you put some money in, and you're putting in the same funds every month. And in a calm time, what's happening is every month you're paying a little bit more for those funds. But now, because of the volatility, people are scared. People aren't buying as much, and what's happening is the prices are dropping. So what you are just doing on your regular basis, which is buying the shares, you are not now buying them a little cheaper than you were last month. And it may be a lot cheaper depending on what the market does. But that sort of strategy and that sort of consistency and commitment to your plan will prove truly valuable in the end. There's a famous study done after the 2008 recession where Fidelity looked at the value of the 401ks pre-2008 and then post-2010 once everything had recovered. And they found that those who pulled their money out and didn't get back in only saw 2% growth in their portfolio. Those who pulled their money out and then tried to jump back in to time the market saw like a 20-25% growth in their portfolio, somewhere around there. Those who just held steady, didn't buy anything, saw a 50% growth by the time that the market turned around. And those who kept buying, so bought when everyone was scared, bought when people were continuing to realize that maybe this isn't the end of our financial markets, and continue to buy ongoing, saw a 65% increase in their portfolio over that time. So the real value is just keeping on with what the goal is. And honestly, this is not too difficult for a business owner. If you think about how much you are dealing with when it comes to volatility as a business owner, it's an everyday, potentially, and every week occurrence. And to sit there and be afraid of your 401k or SEP IRA or whatever sort of tool you're using to save, it goes counter to sort of how you operate as a business owner. And business owners will counter that and say, yeah, but I'm in control of the business. I'm not in control of the markets. But in reality, there's plenty of things that you are not in control of as a business owner. You are not in control of plenty of things as a business owner. You're not in control of inflation. You're not in control of just the sector that you're in terms of whether it's a down or up market. Yeah, you're in control of how you respond, just like you are when investing. And that's really all we're in control of when we're investing. We don't have inside information. There's no crystal ball. Even the people who are paid millions of dollars to predict the market, most of the time they're getting it wrong. And most studies find that over 20 years they will get it wrong. And so no one truly knows what the market will do. My favorite sort of question from clients is, hey, I have X stock and, I don't know what to do with it because the analysts say it could go up $20, but, I'm getting nervous about it. And, my response is the analyst doesn't know. I used to interview analysts all the time when I was a journalist, and most of the time they were wrong. And that's fine. That's what they're paid for. People believe them. Okay, that's the reality of our world, but that's not how you have to operate. And when volatility strikes, it's definitely not how you have to operate. And so those who are buying in are going to see the benefit. If you are a business owner who also doesn't have a retirement plan or savings outside of the business, now is a good time to consider it because you're getting things a little cheaper. It's also a really important strategy just in general because we need to build wealth outside the business. And this is not only a good tax strategy, it's also a good wealth strategy because you're getting cuts on the income now, you're keeping more of your money, and you're creating a layer of wealth that is not necessarily tied to your business. So if your sector struggles, whatever that sector is in your business, well, that may be tough for the business, but at least this over here is still growing. Your future isn't like in strict trouble or anything like that because you have taken the steps to build that sort of pool of funds. And if you are not sure what a SEP IRA is or a solo 401k or just a regular 401k or some other plans that you could potentially benefit from, then it's time to find someone you can speak to about that. I'm always sort of go toward a fee-only financial advisor to do that. But nonetheless, getting in the market is going to be a valuable first step for you. The other part of our market life is that those who kind of go against the noise are the ones who are going to benefit the long term. This is typically true as in any part of your investing life. When markets do poorly, that's when those who are brave, put money in, continue to build their wealth, that's when they tend to see the benefits. If you're using an index fund sort of strategy where you're investing in broad index funds at low cost, what you're essentially doing is investing in an economy. So you have the American economy, you have a total market index. You have the international economies. That's a total international index. And you have bond economies, so a total bond index. Let's just say it's a simple 3-fund portfolio. You've now accessed the U.S. market, the international market, and the bond market. If you think that those markets are going to grow over time, and I'm not talking about like 6 months, I'm talking about 10 years, 20 years, 30 years, then keep investing. This is going to be a blip on that, assuming that this doesn't turn into some sort of dramatic world war. But guess what? If it does, that dollar is going to be very worthless sitting in your pocket. That business you're running is almost likely not going to survive. So you're not protecting yourself by simply not investing in the market. You're just delaying what you need to do in the future. So I would strongly encourage those who are really worried about this right now, really think about where the future of the economy will go and then decide whether it's a good time to buy or not. Because if the economy is going to, quadruple in 15, 20, 30 years, the companies that make up those economies, whether it's US or international, are going to benefit in the long run. I'd like to add just one more thing about this volatility because it's a good lesson as a business owner, because not everything's going to be a smooth line as those who've been operating for many years know. Instead, it's very up and down, up and down, up and down. You kind of have to get used to the volatility in the business. And when we see this on a global scale, it's a good lesson that we have to kind of just keep on focusing on what we can control and respond how we can respond in the business and make any changes that are necessary if there are any changes that are necessary, and keep focused on what we're doing. And that's really all we can do when we're talking about sort of this global scale, because this is a global scale market risk that we have no control of. It bleeds into everything that we do. Even investors don't have full control of the market risk when it's at this level, and to diversify out or anything like that. And so it's a good lesson for the business, because as long as we're doing what we're doing, we can see the potential for, the next year, 2 years, 3 years, and, be able to cover our costs and all that sort of stuff along the way. Then we will benefit whenever this turns, and it could turn next week. So it's a good lesson just to keep moving forward and focusing on what you can. This week's movie review is an oldie. It's well known because it actually won the Oscar for Best Picture in the same year that Citizen Kane came out. This is a movie called How Green Was My Valley, and it's from Oscar winner John Ford. He was actually a back-to-back Oscar winner for Best Picture in those years. So I came across it. It's a podcast that does not need any sort of publicity, but it's called Film Spotting. It's a very big podcast in the film space, and they were reviewing it. I had never I heard about it, but I thought it was sort of a cheesy film. It has a cheesy title, and so I never was seeking it out. But I want to talk about it today because it's a story about a Welsh family that worked in the coal mines. And when they start out, the coal mines are paying them, the father in particular, very well, and all the grown sons very well. And so the father is assuming that the sons are going to be able to work the coal mines just like he did and build a nice, loving family just like he did. And as the movie goes along, you see the poles and the realities of the world break into their family life and their traditions and the cohesiveness of their family unit. One by one, he has 6 children. One is very young, and the other 5 are in the coal mines. And then he has one daughter as well, who is tending to the family and whatnot. So very old school in that manner. But nonetheless, at one by one, each child is separated from the family either through issues with the mines, either through death, either through marriage, and even marriages that they don't necessarily want. And it's a really sobering but loving look at how families kind of move through the times and how our traditions can't necessarily stick to what we hope the future will bring, because based on the past, because things will change, life will change, and we have to respond to it. And it was interesting because there was a moment in the movie, without giving much away, where the coal mine is cutting wages, and some of the sons are talking about unionizing. Some of the sons are talking about leaving and going to America. And 2 eventually do at the beginning. And this really struck me as a business owner because of the bravery and the ingenuity that would have required to go someplace completely new, completely alien. I mean, it's practically going to the moon at that time, to seek jobs and seek another life that your father did not provide, and the bravery that would have been involved in such an endeavor. And it wasn't necessarily that they were going to go to America and start a business, but they were going to America to start something for themselves. And it speaks to sort of what you're doing as a business owner, building something for yourself and building something that you can grow and expand in and serve however you deem fit for your clients and your family. And this and it speaks to kind of that tradition of going out and finding something new that parents couldn't provide. And so there was a lot to really love about this movie beyond just sort of the story and the just the place in history because of what they were dealing with the mines and the expansion of the world. There is some sweetness to this that some people will find corny. But if you can get past that, which I had no problem doing, some of the love story I felt in particular bled into that, but the performances were fantastic, and it was definitely a worthwhile watch if you can handle older cinema like I can. But it also speaks really to this time with Volatility, because it's taking that fear and doing something about it instead of sticking around, just like the Suns did. So definitely an amazing movie, shockingly modern considering the concerns we're dealing with today, and definitely worth a watch. That's the today's show. Again, you can find me on YouTube at Thinking Solo. I'm on LinkedIn under my name, Ryan Derousseau. Be sure to subscribe, and I'll speak to you next time. Keep grinding.